Welcome back to Market on Close. I'm Marley, Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. As we like to close out our show with some final thoughts or standout headlines on the session, a few stand out to me. Carmax, of course, one of them hitting a new 5-year low, was the biggest loser in the S&P after missing in its second quarter earnings estimates in both the top and bottom lines. Retail used car sales were down 5% year over year, and Carmax's auto financing income fell more than 10% in the quarter. Carmax also announced that it will be implementing a $150 million cost-cutting plan over the next 18 months, and that sent shares down more than 20% at the close today. Oracle also in focus today, furthering its pullback. All of this as President Trump is expected to sign an executive order backing a proposed deal to keep TikTok running in the U.S. today. Reports say that Oracle, Silver Lake, and MGX out of Abu Dhabi will be the main investors with 45% control of TikTok USA. Oracle also gained a new bear in Rothschild and Redburn earlier after it initiated coverage of the stock with a sell rating and a $175 price target. The firm says that they believe the market is overestimating the value of its contracted cloud revenues, calling the current market estimates a, quote, risky blue sky scenario that is unlikely to materialize. Shares closed down about 5.5% on that note. And Sam, I was just really struck by that commentary about Oracle and the picture they're painting there.
Yeah, absolutely. Certainly an interesting one to highlight there. And you know what? My takeaways really came largely from the commodity space today. Obviously, we were just speaking, Marley, to Dan Deming about what is happening in gold and silver. There's a rally going on in energy. We've been talking about that with Kevin. This really extended today, even as that crude price came off from a 7-week high. Some are linking this to the AI traders who really need the energy to power everything. And Joe Mazzola has pointed out to a more sort of speculative type of trade playing out in the space as I was talking to him this morning. So we also saw copper prices extending gains after Freeport-McMoRan warned of the production hit from the suspension of its mine over in Indonesia after that fatal mudslide. And that stock actually was one of the biggest losers on the session today. It's the latest in a number of incidents at mines around the world, which has really disrupted supply at a time when demand is surging from that AI boom and also the energy transition. As Kevin Green pointed out to me this morning, it's very important because copper supply disruptions could also pressure input prices for new homes, which could create some margin pressure for home builders. So watch that space as well, particularly as all eyes on the housing sector. And lithium plays continue to rally today after reports of the U.S. potentially taking that stake in Lithium Americas. That is really seen as a strategic move to secure supply chains and reduce that reliance on China. And LAC put on another 20% or so today after its nearly 100% gain yesterday, and Albemarle was also higher on the session too. But heading into tomorrow, Marley, Friday, we've nearly made it.
What are you watching? With a big print tomorrow. PCE, the Fed's preferred inflation, of course, is what we'll have close eyes on. Expected to remain steady at the headline level. Core PCE expected to increase to 2.9%. Now, that would be the highest level in 5 months, but also there seems to be some discord about how this number is going to come in. We talked to Kevin about how the Cleveland Fed expectations are bearish about PCE, more so than what we're seeing. But this really could play an important role in what the Fed decides to do in the October meetings, especially in light of the jobs data we got this morning and the GDP data as well. This is our only inflation print before their next meeting, so we could start to see if some pricing pressures are easing or if tariffs are really causing inflation to accelerate. Sam, how about you? What will you be watching?
Yeah, absolutely. I mean, keeping an eye on that 10-year and the dollar off the back of that data as well, Marley. Also going to obviously be watching the reaction to Costco as we just got that report card. Its earnings call will get underway in just over half an hour at 5 p.m. Eastern. And, really what we want to hear about is any expansion plans, particularly over in China. I'm also seeing that people want to know about some of those membership trends as well. But also, interestingly, what they're going to say about tariffs. Now, I was speaking to Bert Flickinger this morning, telling me that he thinks they'll say that basically they're making the vendors eat the tariffs, which is certainly interesting, Marley, because we've been watching across the spectrum as far as what some of the retailers have been saying about the duties and where they're sort of eating it in the supply chain right now. Some of them do seem to be picking up the tab. You've had the Walmarts of the world coming out saying that, perhaps there will be some pass-through. As I mentioned, there have been some thoughts about whether we actually are seeing the full impact of those tariffs yet, maybe only just 50%. 1%, according to some. But, you know, as you and Alex broke down, I mean, it was a pretty sort of flat performance off the back of what was a pretty much in-line report there.
Yes, a flat performance. And with that, that's going to do it for us here on Market on Close.